Reasonable salary requirement for U.S. corporations. The concept of a reasonable salary is a critical consideration for many U.S. business owners, particularly those operating as S-corporations. The IRS scrutinizes shareholder employees of S-Corp to ensure they are paying themselves a reasonable salary before taking distributions, as distributions are not subject to self-employment taxes, while salaries are. This distinction is crucial because an unreasonably low salary could be seen as an attempt to avoid payroll taxes, leading to potential reclassification of distributions as wages and significant back taxes, penalties, and interest. Defining reasonable is subjective but generally hinges on what a similar position would command in the open market, considering factors like industry, geographic location, experience, and responsibilities. For C corporations, the reasonable salary issue primarily revolves around the deductibility of executive compensation. A C Corp can deduct all ordinary and necessary business expenses, including salaries. However, if the IRS deems a salary paid to an owner or executive as excessive and not reasonable for the services performed, the excess portion may be reclassified as a dividend. This reclassification has significant tax implications because dividends are not deductible by the corporation and are taxed again at the shareholder level, leading to double taxation. Therefore, C-Corp also need to justify the compensation paid to owner employees to ensure it aligns with market rates and the value provided to the company. LLCs, by default, are pass-through entities and are often taxed as sole proprietorships, partnerships, or S-corporations. The reasonable salary requirement largely depends on their tax election. If an LLC elects to be taxed as an S-corporation, then the same rules regarding reasonable compensation for shareholder employees apply. Members actively involved in the business would need to pay themselves a reasonable salary subject to self-employment taxes. For LLCs taxed as partnerships or sole proprietorships, members or owners typically pay self-employment taxes on their share of the business's profits. And the concept of a salary in the S-Corp sense doesn't directly apply for tax purposes. The IRS provides guidance and factors to consider when determining reasonable compensation, though no bright-line rule exists. Key factors include the employee's duties and responsibilities, the complexity of the business, the time and effort devoted, the company's dividend history, and salaries paid to non-owner employees in similar positions. Additionally, economic conditions, the company's financial health, and compensation paid by comparable businesses for similar services are all weighed. Documenting the process used to determine compensation is crucial for substantiating its reasonableness if challenged by the IRS. Independent third-party compensation studies and expert opinions can be invaluable tools for establishing reasonable salary levels. These resources provide data on industry benchmarks, geographic variations, and role-specific compensation ranges, helping to build a strong defense against IRS challenges. Utilizing such data demonstrates a good faith effort to comply with the reasonable compensation requirements. Ignoring these guidelines can expose businesses to substantial tax liabilities, making proactive planning and documentation essential for all entity types. As such, while the specific implications vary by entity type, the underlying principle of reasonable compensation is a cornerstone of U.S. tax compliance for businesses with owner employees. S-Corp face scrutiny to prevent tax avoidance through distributions, C-Corp must justify salary deductibility, and LLCs follow the rules of their chosen tax election. Adhering to market standards, considering various IRS factors, and maintaining thorough documentation are paramount for all businesses to mitigate audit risk and ensure proper tax treatment of owner compensation. To learn more about our law firm's incorporation and business law legal practice, we welcome you to visit our website or contact our law firm to schedule an initial consultation. Thank you.